Hello everyone and welcome back to Option Alpha in this video tutorial for the cup and handle chart pattern. So as always, we'll get right into it here. So the chart pattern cup and handle is actually pretty easy to spot if you know what you're looking for. It looks just like it sounds. It has a huge rounding bottom that forms the cup of the pattern. And then it has this slight handle here which can be either a flag or a pennant or just a little bit of downside consolidation. So as the name implied, it's a two-part pattern. It's important that these patterns, or this particular chart pattern, has both parts. You can't just have just the cup without the handle, and likewise you can't have the handle without the cup. It's important that actually this is in the middle of an already established trend. That's really important with the cup and handle pattern. Usually people see this on the bottom side of a market as it's bottoming, and it's not really technically a cup and handle pattern. You want to see an initial move higher in the stock, and then it starts to consolidate and have this huge rounding base. And that's really important. It can't be a V-shaped bottom. It can't just shoot down and then come and shoot right back up. It's got to be a long and drawn out base that it's a rounding bottom. And really why you need that is because it's going to collect a lot of volume, a lot of buyers, and that's really going to propel it once it can break out. So once you have this huge rounding bottom, it's going to come back up near the old highs that began at the cup portion of this pattern. And then it's going to consolidate just slightly for 1 to 3 weeks. And that's usually the key here, is that it consolidates for just a little bit in the opposite direction and again gathers up steam for the next breakout. And then once you have this breakout here, then you see a pretty significant move off of the bottom. So again, these are really good patterns after the market has already bottomed. Usually you like to see the market bottom already, start to make a new trend, then form the cup and handle. We don't like the market to fall into a cup and handle pattern. That's usually not as powerful as the latter. So crunching the numbers, as we always do with these these chart patterns here, the average rise or decline from a cup and handle pattern is actually pretty substantial. These are pretty powerful chart patterns that you have here. They usually, again, form at the bottom of a trend or bottom of a stock chart. So as they start to bottom out, you'll start to see, again, like I said, a lot of buyers that have been accumulating and building up in the U-shaped bottom, and that will lead to a pretty significant rise after the breakout, about 38%. The breakout failure rate is only about 10%. Again, relatively low, not as low as some other chart patterns out there, but it does have a relatively low breakout point. The risk you run with the cup and handle pattern is that the stock has already been crushed so long, so hard, and stays down in that area that sometimes a lot of investors will be kind of on the fences about getting into the stock and breaking it out to new levels. So that's typically why you see this breakout failure rate just a little bit higher at 10%. The throwback rate at 74% is almost a no-brainer, and if we go back here, that's because we do have a handle. So this handle or pennant or flag pattern usually breaks out and pulls back anyway. Again, like we were talking about before, most investors, since this stock is usually going to be crushed down pretty low, are going to want to see some good breaking of higher highs and lower lows. And so they're not going to immediately just rush crazy back into the stock. They're going to take their time. And that's why usually these patterns have a really good throwback and pullback rate. Again, this is really good as a stock trader or an option trader because then you know if you see a breakout, you can actually try to catch it on the throwback or the pullback. Some key points to remember with the cup and handle pattern. The cup should be U-shaped and should resemble a bowl or a rounding bottom, just like we talked about before. No V-shaped bottoms. That's not a cup and handle. I've never seen a cup that was a V-shape. The handle represents the final consolidation or pullback before the big breakout. That's important to have on these charts. You want to see that final area of real consolidation, very tight area on that handle, that flag or pennant type pattern that starts to form. That's really important because after that breakout, that's what's really going to propel the stock much higher. And then third, the cup has to extend between 1 to 6 months. The handle is 1 to 2 weeks max. And so that's what we were talking about before. And again, if I go back here, that this cup part of this pattern must be really long and drawn out. Like we said before, you have to accumulate a lot of buyers. And then we want to see on the handle a pretty quick handle pattern start to form. We don't want a long handle that just continues into a new downtrend. That's not going to be good for our. Hey, thanks for watching this video from Option Alpha. As always, we invite you guys to come back and check us out at optionalpha.com. And if you like this video, please share the video with any of your friends, family, or colleagues on your favorite social network.